Welcome to Quiet Quarterlies, where public companies whisper their stories through numbers. This reading is based on public filings made with the U.S. Securities and Exchange Commission. Every effort has been made to present the information clearly and faithfully, but for accurate details and official figures, please consult the original filing at SEC .gov. Tonight, we drift through Delta Airlines Incorporated's quarterly report filed on October 10, 2025. Settle in, relax, and let the quarterlies quiet your mind. We will begin with the airline's core financial performance as detailed in the condensed consolidated statements of operations and comprehensive income. For the 3-month period ending September 30, 2025, Delta generated total operating revenue of $16.67 billion. This is a notable increase from the $15.68 billion reported in the same quarter of 2024. The largest component of this was passenger revenue, which rose to $13.51 billion in 2025 from $13.11 billion in 2024. Cargo revenue also saw an increase, reaching $233 million compared to $196 million in the prior year. Other revenue grew significantly to $2.93 billion from $2.37 billion. Total operating expense for the quarter was $14.99 billion, up from $14.28 billion in the third quarter of 2024. The largest expense, salaries and related costs, increased to $4.44 billion. In contrast, aircraft fuel and related taxes decreased to $2.57 billion from $2.75 billion in the prior year, reflecting a drop in market prices. After accounting for all operating costs, Delta achieved an operating income of $1.68 billion for the quarter, an improvement over the $1.40 billion earned in the same period of 2024. Following non-operating income and expenses, including a net gain on investments of $311 million, the income before income taxes was $1.78 billion. After a provision for income taxes of $360 million, the final net income for the third quarter of 2025 stood at $1.42 billion. This is a significant increase from the $1.27 billion in net income from the third quarter of 2024. This profitability translates to a diluted earnings per share of $2.17 compared to $1.97 in the same quarter of the previous year. Next, we turn to the consolidated balance sheet, which provides a snapshot of the company's financial position as of September 30, 2025, compared to the end of the previous fiscal year, December 31, 2024. As of September 30, 2025, Delta reported total assets of $79.62 billion. This is an increase from $75.37 billion at the end of 2024. Current assets grew to $11.23 billion, including $3.79 billion in cash and cash equivalents. The bulk of the company's assets are non-current, totaling $68.39 billion, with the largest component being property and equipment, net of depreciation at $39.37 billion. On the other side of the ledger, total liabilities stood at $60.80 billion. Current liabilities, which are due within a year, were $28.25 billion. A significant portion of this is the air traffic liability of $8.17 billion, which represents tickets sold for future travel. Non-current liabilities totaled $32.55 billion, with long-term debt and finance leases accounting for $12.77 billion. This leaves total stockholders' equity at $18.82 billion, a substantial increase from the $15.29 billion recorded at the end of 2024. Now, we will examine the consolidated statement of cash flows for the 9 months ended September 30th, 2025. Net cash provided by operating activities was strong, totaling $6.08 billion, nearly level with the $6.13 billion generated in the same period of 2024. Cash used in investing activities amounted to $3.46 billion, primarily driven by $3.59 billion in property and equipment additions, including payments for new aircraft. Cash used in financing activities totaled $2.07 billion. This was largely due to $3.93 billion in payments on debt and finance lease obligations, as well as $318 million in cash dividends paid to shareholders. Overall, the company saw a net increase in cash, cash equivalents, and restricted cash of $550 million over the 9-month period, bringing the ending balance to $3.97 billion. In the management's discussion and analysis section, the company provides context for these numbers. Management highlights that the $1 billion increase in total revenue for the third quarter was driven by higher demand for premium products, especially from corporate customers, and increased loyalty travel awards. The results from the prior year's quarter were negatively impacted by a CrowdStrike-caused outage, which led to an estimated revenue loss of approximately $380 million and $170 million in additional operating expenses in 2024, making the year-over-year comparison particularly favorable. Breaking down passenger revenue by geography for the third quarter, domestic revenue increased by 5% compared to the prior year on a 4% increase in capacity, driven by strong demand for premium products from corporate customers. Pacific region revenue grew 3%, reflecting network restoration and increased load factors to China and Japan. However, Atlantic revenue decreased by 2% and Latin America revenue decreased by 3%, with the Atlantic region impacted by lower main cabin revenue outside of peak summer months and Latin America seeing reduced demand for Mexico leisure markets. A key driver of Delta's business is its SkyMiles loyalty program. During the first 9 months of 2025, total cash sales from marketing agreements related to the program, primarily its co-brand credit card relationship with American Express, were $6.0 billion, up from $5.5 billion in the same period of 2024. Regarding expenses, the 6% decrease in aircraft fuel costs for the quarter was due to an 8% decrease in the market price of jet fuel. The average price paid per gallon fell to $2.26 from $2.51 in the prior year. Salaries and related costs increased by 5%, primarily due to base pay increases for employees. In looking forward, the company has significant investments planned. As of September 30th, 2025, Delta had future aircraft purchase commitments totaling approximately $16.01 billion. This includes firm orders for 263 aircraft, such as 71 Airbus A321-200 NEOs and 100 Boeing 737-10s. The airline's mainline fleet consisted of 986 aircraft with an average age of 14.8 years. In terms of financial condition, Delta ended the quarter with $6.9 billion in liquidity, which includes cash, short-term investments, and undrawn revolving credit facilities. The company continues its focus on debt reduction, having made $3.9 billion in payments on debt and finance lease obligations during the first 9 months of the year. During the quarter, the board of directors approved a quarterly dividend of 0.1875 shares per share. That concludes tonight's filing. Thanks for listening, and good night.